Good morning. Watch this video in full and to the very end because it will contain a lot of important information and also lessons for investors and also how to think critically about information that is being presented to you. So first of all, let me say this is not financial advice, so always think for yourself, do your own due diligence, and this is just my own personal view about things, and I'm trying to break down here some information for you because this chart that you're seeing here has been sent to me countless times. I saw it popping up on LinkedIn, on Twitter. People sent it to me in direct messages. Even one guy that I know from Italy who's owning 500,000 NEO shares sent it to me. And so, even some of the biggest investors are, I think, kind of misled by information that's out there sometimes. So what are we looking at? So we are looking at an infographic shared by Visual Capitalist and titled Tesla Profit Margin. And first of all, let me say this. I'm invested in Tesla. I'm a big Tesla bull, and certainly the margins and the profitability of Tesla is a very big reason why I'm invested in this company. Nonetheless, I think it's very important to look a little bit deeper here. So the chart or the graphic here is comparing Tesla's profit here, that is around $10,000 net profit per vehicle in Q3 2022 versus, so that is Tesla here versus the established companies like GM, BYD, Toyota, Volkswagen, and so on, and showing that these car companies are making pretty mediocre profits per vehicle sold. So basically what you take is the net profit and then also in comparison to the amounts of vehicles and the volume sold, and then you end up with this kind of conclusion, and I will show you where this data is coming from in a second. And at the very bottom, how should it be different? We have both Xpeng and NIO, so a different set of companies. These are of course, startup companies from China. So if you are just simply looking at this sheet here, then of course the only conclusion can be Tesla is good, everyone else is failing and bad, and particularly NIO here is doing not very well. Now, let's break it down a little bit. So first of all, where is this information coming from? And it's actually taken from something published by Reuters. And what you can see here is that the initial graph by Reuters actually contains a bit more information. Again, the data used here is entirely only from this segment here. So they're only taking the net profit per vehicle and not the gross profit per vehicle. And I'll explain in a second. First of all, the data point that is picked for Tesla here is the very high end, 9,574 net profit per vehicle. That's the one to be found on this graph here, right? One thing to note here is that this is obviously data from Q3 2022. So this is before the very price cuts of Tesla. Tesla has done lots of price cuts, and particularly in China, which is the most profitable factory for Tesla. And so one should actually assume that the net profit per vehicle is possibly trending a little bit to the downside here. I'm not sure if it will be as low as the low point here or even lower. However, picking this high number is actually something that we can certainly say for now. In the meantime, this is something of the past. Possibly in the future we'll get there again, but for now I think it's quite unrealistic that the next quarters will show this large number of net profits per vehicle. At the same time, if we look, for example, here for NIO, they have taken the very low point, so minus $19,000 US here. That's exactly the number taken here from to make this infographic here. So on the one side, they picked the very high range of the scale, and on the other hand, for NIO, they're picking the very low range of the scale. So that is telling me a little bit that this graphic certainly is exaggerating things, or you could also come to the conclusion, of course, that somebody is trying to put Tesla here in a better light than actually the data suggests here, would be one interpretation. But anyways, now to the data that is not part of the chart, which is the gross profit per vehicle. And here it's interesting that NIO comes in at the second place next to Tesla. So NIO is generating between $8,000 and $10,000 per vehicle. That makes a lot of sense because NIO has very high average sales prices, around $55,000, and they have a pretty high margin as well, around 18%, has been more than 20% in the past and will get there again. So meaning on a very high average sales price, they are making actually a lot of money. Tesla here is leading, of course, but once again, this was before the price cut. So both the average sales price is coming down, as well as the vehicle margin seems to be coming down a little bit. So we could conclude possibly that maybe NIO and Tesla in the next couple of months will rather be pretty much on par when it comes to how much do they actually make in profit per vehicle sold. And that is also something very interesting to consider. And therefore, the rather surprising outcome might be that maybe NIO is actually on a profitability per vehicle metric industry leading going forward when the price cuts of Tesla manifest like this. And that is kind of not included in this graphic after all. But to the point, of course, here this graphic is comparing net profit per vehicle. And it's, of course, true that Tesla is extremely profitable. And that's why I'm investing in it. That's also why I made the video about that. I do think Tesla is not a stock bubble because compared to some of these legacy brands, of course, Tesla is, first of all, growing and more profitable as outlined here, but it's also a more mature company for certain than NIO. And so for NIO here, they have, of course, taken the worst possible data point in the worst possible time. But what's missing there is that, of course, NIO is a much younger company that is not breaking even yet. That means that for the cars that they're selling and which they're making maybe an industry-leading gross profit per vehicle, they have still a larger overhead currently because the volumes are not so high. That means they're not selling as many vehicles yet. And so from an investor standpoint, I think it's a super important lesson that this infograph can be quite misleading if you don't think it through. Because what is your job as an investor? You actually want to find alpha or seeking alpha because you want to find a possible upside. So currently, of course, NIO is a very young company not making profits, right? Although this is exaggerated, as I've pointed out before. However, what your job is as an investor is to find out whether or not NIO could turn this page in the future. And as I outlined here, with some of the industry-leading gross profit per vehicles, there is a potential case for a large upside for NIO, meaning that if they sell more and more of those vehicles in the future and then therefore have so many revenues and gross profit per vehicles, then they will have no issues, for example, at paying off, for example, the bottom line, the overhead, such as R&D cost, in which they're heavily investing in right now, as well as overhead, such as marketing expenses. And this is when it turns from a loss-making manufacturer to a profit-making manufacturer with, I would say, the potential to have similar profitability than Tesla, or even higher if they manage to hold a very high average sales price and high margins. But that's up to you. That's your job to kind of make up your mind whether or not it's a realistic case that NIO can scale to a volume that break even is possible and that a similar profitability is possible. Now, a common argument that I also hear is that, well, this will never happen because, of course, NIO has, for example, huge expenses for battery swapping and other marketing expenses like NIO houses, and therefore, the net profit per vehicle will always stay low. Well, you can make that case, and it's certainly one of the scenarios. Could happen. However, what I also pointed out in a previous tweet, I just want to compare that Tesla at a younger stage, comparably to where NIO is today. In Q4 2017, they were selling around 30,000 vehicles in one quarter. That's very similar to NIO's Q3 2020, actually the one in the graph, where NIO was also selling around 30,000 vehicles. And in that quarter, Tesla's net income was minus 675 million, and NIO's was actually minus 577 million. So back then, Tesla actually made a larger net loss than NIO is doing today. And as we know, Tesla has no NIO houses, Tesla has no battery swapping, and still they are making a much larger net loss back then when they were a young company than NIO today. And similarly, they had even less cash at hand that NIO has today. So if one would be fair with this infographic, you could add here Tesla back in 2017, as I just pointed out, and it would be even a much more red and big bubble than NIO in this infographic, because it's actually the similar metric. So lessons learned. Don't always fall just for the very information presented to you. It's time to add context and think it through as well. And then as an investor, it is more about which scenario do you think could be a likely outcome. Also, of course, no doubt, and a Tesla is currently maybe the much safer investment given its growth rates, given its profitability. For some of the legacy automakers, not so sure, because investors are looking what is the potential upside in the future. Maybe this Volkswagen car here, those profits are actually going down in the future. So you could not even say, even though this company is profitable right now, is it a more certain investment? It's not possible to see it that way. At the same time, for NIO, of course, there are lots of risks, whether or not they can actually execute and break even in a similar manner as pointed out with Tesla. However, we cannot say that based on this infographic that this is actually really an insightful graphic here and showing that NIO shouldn't be a potential investment. On the contrary, I would say the upside here might be rather big just because of the fact in which situation NIO is right now. And if you're an investor and looking into the future, you need to make your projections, what you are expecting from the company, and then place your money where your bet is, and this is essentially your investment. So it's aligned with risk. You need to think about it. I hope that was insightful. Thank you guys for watching. See you in the next video.